Hi, my name is Darren Joseph from HCJ.tax. We're the team that seeks to demystify this sometimes confusing world of international tax. And today we have the honor and the privilege of having a chat with Lovie. Lovie, can you please introduce yourself to those that don't already know you?
Thanks, Darren. My name is Lovie. I'm the Managing Director of Animo Associates Mauritius Limited. Animo Associates Mauritius is a licensed management company. We are regulated by the FSC. We are involved into a process of doing all the company formations. So any type of company, be it domestic, GBC, authorized companies, special licenses. We also, any company that needs a license in Mauritius would need a management company like Animo. On top of it, we also assist our clients with opening of bank accounts, day-to-day administration, bookkeeping, compliance, taxation. And we also assist our clients who want to come and live and work in Mauritius. There's a lot of them who also purchases property here. Animo is not only present in Mauritius. We are headquartered in the UK as a group across the UK. So London, Mayfair, Essex, Manchester, Birmingham. We're also present in Ireland, Cyprus, Dubai, but we work with the rest of the world. That's a little bit of Animo probably for you. And I'll be very happy to assist you if I can do further.
Fantastic.
So in terms of corporate tax, I know you touched on that already at a higher level, but again, it's worldwide tax. Does the remittance system work? Are there any CFC rules? Are there any complications? Or is it just more or less that flat 15% worldwide income?
I'm not going to go too much into detail here because it's going to get too technical otherwise. But I'm going to give you in a nutshell how it works. So every corporate company in Mauritius is supposed to be taxed at the rate of 15%. However, we have different type of companies. One type of company would be the domestic company. The other company would be the GBC company. And the third company would most probably be the authorized company. Let's take it by the first one, which is the domestic company. The domestic company is a company which is, as the name says, is mainly to deal with the locals, right? So normally, if a non-citizen of Mauritius does business principally outside of Mauritius, decides to use a company, they will have to use a GBC company instead of domestic company.
But just to be clear, that's a global business company, right?
That's a global business company, correct.
Right.
Yeah, I'm going to come back on the GBC company in a minute. Okay. So the domestic company is more a company that does business locally. If you have a non-citizen of Mauritius who does business in Mauritius, they can be 100% shareholder of this company. So there is no need for local ownership. They can be 100% owner. But the only thing is that in a domestic company, you would need to have a minimum of one local director. Right. And that one local director means one resident director. Animo do provide those services if ever there's any need for that. And on top of it, this company will be doing its business principally in Mauritius. But now let's say you have foreigners who are doing business outside Mauritius and their principal activities outside of Mauritius. They will not be able to do this under a domestic company because the Finance Act 2018 clearly states that where the majority of shareholders in a company which does business principally outside of Mauritius or non-citizen of Mauritius, they would have an obligation to set up a GBC company. A GBC company is a global business license company. It is a company which is tax resident in Mauritius. It is a company which needs to be managed and controlled from Mauritius. And on this type of company, the tax rate is 15%. If you think about it, this type of company is not going to be taxed at only 15%. It can have a specific rebates where it can also pay tax at the rate of 3% because it gets 80% tax credit.
Wow. So it's like Malta, you pay the 15 and you get a refund?
No, it's not like a refund. Basically, what happens is that all GBC companies in Mauritius are taxed at the rate of 15%. But GBC companies who are involved into qualifying activities get 80% tax credit. 80% of 15%, that's 3%. What are the qualifying activities? They are investment holding vehicle. Let's say a GBC company which will be receiving foreign dividend. It would be taxed at the rate of 3%. If a company does receive income from investment advisor, investment dealer, closed-ended fund, CIS, investment advisor, payment intermediary service, if you do have other structures, investment like you do aircraft leasing, they all qualify for 3% tax. But remember, Mauritius has been approved by the OECD. We don't give the 3% tax flat. You have to meet certain substance conditions. So we call it the management and control test. We call it the substance condition. So you would first of all need to show that the company is actually managed and controlled from here. And second thing is you would need to show that the company has economic value in Mauritius by either employing people, having office space, to show that your minimum expenditure you're incurring are in Mauritius. So for each activity that I've mentioned earlier, there are specific criteria. But if you satisfy those criteria, the 3% tax is not a problem. It's legal. It's fully approved by the countries that we work with. And this is why we have been removed by the grey list so quickly.
Okay. And so you mentioned, of course, it's not an exhaustive list. What about consulting or online marketing?
Yeah. Unfortunately, those activities don't fall under the qualifying activities.
Right.
So, your companies like investment holding, investment advice, close and fund, there's a lot of work that needs to be done at the back. So this is where the incentives, I will call it, falls in. And this is where the 80% tax credit kicks in. And at the same time, remember that the GBC company has tax treaty. So you would be able to benefit from the tax treaties as well. So I would say under a GBC company, you could be paying 3 to 15%, but it could be that you're also paying 0% if your withholding tax that you've suffered in the source country is higher than the 80% tax credit. Then you can claim the higher of. It's quite technical here. I don't want to go into detail here, but those are things that could be allowed, and they're all legal. They are all in the law, and they all been approved.
Okay.